Muted.
Everybody, this is Jason from Nelco. We're ready to get started here. Thank you all for joining us. I wanted to kind of get started a little bit here. My name is Jason, again, from Nelco. Also on the line, I have Richard from 1099, etc. Richard, if you're there, can you just let everyone know you're there?
Hello, everybody. This is Richard with 1099, etc.
Thank you very much. Hey, thank you guys for joining us webinar about Affordable Care Act reporting. Nelco and 1099, etc. partnered together to help you guys take care of your reporting very efficiently, effectively. As you know, 1099, etc. is a great program for filing your year-end forms, and adding on Affordable Care Act reporting is going to be no exception. A little bit of an agenda about where we are and what we're doing. Quick introduction, we'll go through some things, and then I'll talk a little bit about the Affordable Care Act and the Form 1095-C information. Richard will go through 1099, etc., and how to file your 1095-Cs through there, and then we'll take questions and answers towards the end. If you guys have questions, please submit them via the questions in the GoToWebinar, and we will do our best to answer them. We'll try to get them together, answer them periodically, but at the end, we'll probably go through most of those questions unless there's something that comes up right in the middle of it that we can address. So, again, I'm Jason from Nelco. Nelco and AMS partner together, as I said, to make your year-end reporting more efficient and effective. Here at Nelco, we'll sell you guys the paper forms that are compatible with the 1099, etc. programming. We also work with them on some electronic paperless options. So I want to talk a little bit about the 1095-C. So let's just go through this for a minute. What is it? Affordable Care Act goes by a lot of different names. Obamacare, various names that people have for it, whether they are good or derogatory sometimes. But ultimately, who needs to file under the Affordable Care Act? Any employer with more than 50 full-time employees or equivalents is considered an applicable large employer and needs to file 1095-C. So 50 is kind of that magic number. If you're over 50 employees or full-time employees or full-time equivalents, you need to file a 1095-C. If you're under 50 full-time employees or equivalents, you don't have to file a 1095-C. But if you are self-insured, we can talk for a little bit about self-insured and what that means. But if you're under 50 and self-insured, you would need to file a 1095-B as well. Most people are going to be looking at filing 1095-C. That seems to be the form that's more popular, and that's the one we're going to focus on here today. If there's considerable interest in a 1095-B, we can go over that at a later time. But for now, let's just talk about 1095-C, since that's where most people seem to be struggling the most. And there's a lot of questions about what it means and the regulations surrounding it. So how do you determine whether or not somebody is a applicable large employer, an ALE? And again, I said the magic number is 50, but it's 50 full-time employees or equivalents. Quick note on full-time, 30 hours per week in the calendar month is considered full-time. I don't know what you guys consider full-time, but the IRS considers 30 hours per week full-time. There's a look-back period to the previous year to determine status. So to determine for 2015 whether or not you are an ALE, you would look back at 2014. And how to establish the ALE. So obviously, if somebody works more than 30 hours per week, they are considered a full-time employee. They count as one. Part-time employees, things get a little bit more sticky because there's this thing called a full-time equivalent. And so basically, it's a question of how many employees add up to an equivalent. And ultimately, if you have two people who are working 15 hours a week, they add up to one equivalent. So it works up to 30 hours. And to determine that, and this gets a little bit complicated, so I'll run through it in a different slide here in just a second. But to determine equivalent, you combine the numbers of hours of service of all non-full-time employees. So take your full-time employees out of the equation, look for non-full-time employees, and then add together their hours. Don't include anybody that works more than 100 hours, 120 hours of service in that month, because that would make them full-time. And then divide that total by 120. And then you add together that number, that divided number, plus your number of full-time employees, and that will give you, determine your ALE status. So here's kind of an example of an employer. So you have 70 employees, 30 are full-time and 40 are part-time. Let's just say that all 40 of those part-time employees work 20 hours per week times 4 weeks. That's 3,200 hours. Take 3,200 hours, divide by 120, and you come up with 27 full-time equivalents. You add up the 30 full-time employees and the 27 full-time equivalents. You get 57 employees and equivalents. That equals an ALE. That number is then taken for that month, and you average it over all 12 months of the calendar year. So if you had 57 in January and 52 in February and 40 in March, you add all those up and divide by 12 to determine your full-time equivalent status. You spend a lot of time going around and around on that. Most people know whether they're under 50. Obviously, if you have under 50 employees in general, you know you're under that and you don't have a 1095-C reporting obligation. If you are self-insured, again, you have to file a 1095-B if you're under 50. But if you're over 50 employees, you need to do this calculation to determine how many full-time employees and equivalents you have. Most people know that they're either over or under. Sometimes when you get people in that 60 to 70 total employee range, and some of them are part-time, that's where you get some questions. So the Affordable Care Act says that a plan must be affordable and it must provide minimum value. So let's break down a little bit about what that means. If a plan's cost is more than 9.56% of an employee's household income, it is not affordable, and the employer could be responsible for an employer shared responsibility payment. Some people call that a tax, some people call it a penalty, a fine, whatever you want to call it. The coverage that you provide and the employee share of that coverage cannot be more than 9.56% of their household income. Determining household income is kind of difficult. Obviously, you have spouses and other family members that could be contributing to that household income. And so in the name of privacy and not having to ask all your employees about what their spouse's income is, the IRS established 3 safe harbors. So basically, if you meet one of these 3 standards, you can be considered affordable without actually having to know their full household income. First one's the W-2 safe harbor. So on the W-2 that you gave them for 2014, or I'm sorry, for 2015, 2014 is only look back there. For 2015, is that number going to be more than 9.56% of what you paid them? There's a rate of pay safe harbor where you can do a calculation based on how much you are paying them on a regular rate and averaging that out and then finding if that's more than 9.56%. Finally, there's the federal poverty line safe harbor, which is probably the most difficult one to do, but it's the easiest one to calculate. And so there's an issue here regarding what your federal poverty line is. So the federal poverty line, I believe, is somewhere around $11,500. If your plan costs less than 9.56% of that $11,000 on an annualized basis, you can immediately put that in so you know that you're safe and the IRS will call that good. To provide a minimum value, so again, that's affordability. Talking about minimum value, the plan must cover at least 60% of expenses incurred. So it's important that it covers at least 60%. You can work with your benefits provider or your client's benefit provider to determine whether that meets that threshold. I'm getting a few questions coming through regarding employers that are less than 50 employees. And so I want to just make a couple of quick comments about smaller employers. If they are not self-insured, if they are fully insured and they purchase their plan through a traditional healthcare insurance provider, you do not have a filing responsibility if you have less than 50 employees. The insurance provider will be sending them a 1095B. If you are less than 50 employees, you do not need to worry about sending them a 1095C. Unless you're self-insured, then you would send them a 1095B. So even if they're providing health insurance, and it's regardless of whether or not they're applying, even if they are providing it, but it is they're under 50, they still don't have to file a 1095C. Hope that answers everybody's question. So this is the form, and this is the form that people have a lot of questions about, and want to go through it, break it down. It's really not as difficult as a lot of people might think. So once we go through it, hopefully you'll see it's a little bit simpler. It does involve some additional information, so let's talk about that for a second. Part 1, as you can see up here, is employee and employer information. This is all pretty basic. It's basic payroll information. You probably have this saved in your system already. All that's there. You should be good to go. That's a pretty simple basic information section. Employer's name, social security number, street address, employee's name, and then the same information for the employer. Pretty straightforward. Part 2 we're going to skip just for 1 second. Let's skip down to part 3. This is the covered individual section. If you are over 50 employers, so you're over that threshold, you're an ALE, and you're self-insured, you need to fill out part 3. If you are not self-insured and you're over 50, you can leave part 3 blank. So part 3 is only for self-insured employers over 50 full-time employees and equivalents. But again, even that, the information on this is not difficult information. It's just information you're going to have to collect, which can be a pain. I recognize that, but it is pretty simple information. It's just the name of the individual, the SSN, date of birth, and then what months they were actually covered under that plan. So if they're covered all 12 months, just a mark in the covered all 12 months box. Pretty simple information. Again, it's probably information you don't necessarily have about dependents, but it's pretty basic information. It's just a matter of getting it collected. So let's talk about part 2, because this is the part that seems to be tripping most people up. Line 14 and line 15 are specifically about what your offer was to the employee. These need to be filled out regardless of whether or not they actually accepted the coverage. And again, this form has to be filled out for every employee, whether or not every full-time employee, whether or not they accepted the coverage or did not accept the coverage. Honestly, whether or not you even offered them coverage, it needs to be filled out for every one of those full-time employees. The lines 14 and 15 specifically look at the offer of coverage. And again, this is not about what coverage they took, it's about what coverage you offered them. So for example, you probably offer an employee-only plan, maybe an employee plus spouse, maybe an employee plus family plan, and you may even offer a couple different levels in terms of premium. So the least expensive premium to the most expensive premium, depending on different coverage, different deductibles, that sort of thing. So for these two lines 14 and 15, you really want to focus on that single-only lowest cost premium. Hope that makes sense. Let's look at line 14, because that line requires a code. So the line 14, code 1A, this is the easiest code to enter if you qualify. I would highly recommend using this if you qualify. So you provide a minimum essential coverage to the offer to the employee with the employee contribution for self-only coverage. So again, that least cost self-only coverage equal to or less than 9.5% of that single federal poverty line. And then you also offer at least minimum essential coverage to the spouse and the dependent. So that employee-only least expensive plan with less than 9.5% of that poverty line rate. And then you also had coverage available to the spouse and the dependent. That's the easiest code to use. The other codes, though, are probably going to be more applicable. Excuse me. Code 1B, you offered coverage to the employee only. Code 1C, you offered it to the employee and the dependents, but not the spouse. 1D, you offered it to the employee and spouse, but not dependents. Code 1E, you offered minimum essential coverage to the employee and dependents and spouses. That didn't meet that poverty line standard. Code 1F, minimum essential coverage not providing minimum value, so it doesn't cover more than, it covered less than 60% of the costs that offered. So your coverage did not meet that 60% threshold. Offer of coverage in 1G to employee who is not a full-time employee for any month of the calendar year and who enrolled in self-insured coverage for one or more months of the calendar year. So this is where they were not an employee for that month, but they did enroll later in the month. Code 1H, no offer of coverage. You simply did not offer coverage to them for that time period. Code 1I, transition relief for 2015. There's some transition relief plans that I'm not going to get into because we could spend a long time on them, and we're trying to get moving through this somewhat quickly. So I'm just going to go ahead and say that you guys can look into transition relief a little bit later. So back to the form. Line 14, we went through our codes on there. Line 15, this is the employee share of the lowest cost monthly premium for self-only minimum value coverage. So again, employee only, least expensive coverage cost, what they have to pay every month. If it's the same every month, put a figure in the all 12 month. If it changes, just go ahead and put it in there. A couple quick notes about line 15. You complete line 15 only if code 1B, C, D, or E is entered on line 14. So if any of those other codes other than 1B, C, D, or D are entered, you just go ahead and leave that code blank. Oh, the other thing, you enter the amount of the employee share of the lowest cost monthly premium. Again, only the offer. It was not the plan that they took. This is only the offer of coverage. IRS doesn't necessarily care how much it cost the plan that they took. What they really care about is what your offer was to them, whether you offered them affordable insurance or not. If the employees offer coverage but is not required to contribute any amount towards the premium, so you're paying for all of it, enter 0. Don't leave the code blank in that case. All right. The final one talks about the safe harbors we talked about. We're almost done here, and we'll get through and turn it over to Richard here in just a second. Talking about safe harbors. For line 16, only enter one code, even if multiple codes apply. So even if there's a couple different ones that could apply to this, only put one code in this box. There's a hierarchy to which codes. If code 2E applies, and we'll show you what all the codes are in just a second, use that one. If it doesn't, use code 2C if that applies. If it doesn't, now from there, you just find the one that best applies. So it goes code 2E, 2C, and then the rest of them. If no code applies at all, go ahead and leave it blank. There are 9 available codes. Code 2A, the employee is not employed during that month. So they weren't employed on any day of the calendar month. Say it was a mid-year hire, or it was they were let go mid-year. You put code 2A for that month if they are not employed any day of that month. Code 2B if they're not a full-time employee. Enter code 2B if the employee is not a full-time employee for the month and did not enroll in minimum essential coverage if offered for the month. If the employee is terminated mid-year, go ahead and put code 2B in that month that he or she was terminated in. Code 2C, this is probably the one that most people are going to be using. Your employee did enroll in the coverage that was offered. This is where the IRS actually does care whether or not they enrolled in that coverage. So you want to put code 2C if they took advantage of offered coverage. Code 2B is the employees in a section 4980H B limited non-assessment period. So when they first started, they were in some sort of a transition period where they were not offered coverage. Code 2E, this is the multi-employer and interim rule relief. There's multi-employer and some interim guidance regarding some collective bargaining and union situations. That is a key one. If you don't use this one, go to 2C. But if this is applicable, use code 2E overall. Now, if the employee did not take the coverage that was offered to them, this is where you would also want to put in that safe harbor that you found that the code, the coverage that you offer them was affordable, whether you were using for the W-2 safe harbor, 2F, poverty line safe harbor, 2G, 2H would be rate of pay safe harbor, or 2I, non-calendar year transition relief. Again, there's some transition relief that's going on here a little bit later. Going through a lot of information here, and I had a quick question about whether when we rewatch this presentation later. I am recording it, so we can work on making that recording available to everybody, because we are flying through this information pretty quick. Another quick question, just catching up. A 1095-C then has to be separately prepared for each employee because of lines 14 and 15. Yes, every full-time employee needs to have a 1095-C filled out. And kind of transitioning actually to what I got up here on the screen, some quick notes about ACA reporting. It's similar to W-2s and 1099s in a lot of ways. There's a 250 e-file threshold. If you are filing more than 250 forms with the IRS, you do need to electronically file. Copies must be provided both to the IRS and the employee. So you need to send one copy to the IRS, you need to send one copy to the employee. The reporting date requirements are the same. January 31st for employee copies. This year, January 31st falls on a Sunday, so you have until February 1st, but usually it's January 31st. If you are sending a paper copy to the IRS, you need to have it postmarked by February 28th. Again, February 28th falls on a Sunday, so March 1st, or March 31st if you are electronic filing. One way that you are going to find a difference between W-2 and 1099 filing with 1095 Cs is that no state reporting is obviously required. This is only a federal mandate. There are no required reporting to the state. So I think I have answered most of the questions that are coming through. Another question following up here. Please re-explain clients with 49 or less do not need to do anything. So there is kind of a question out there. If you have 49 or fewer full-time employees and equivalents, they've done the math and they realize they're less than that 50. If the employer, even if the employer is paying for some share or all of it, if they are not self-insured, they still do not have to file. The employee will be receiving a 1095-B from their insurance company. They will not be receiving a 1095-C from you or from their employer. Most people in America will be receiving both a 1095-C and a 1095-B. The 1095-C will be coming from their employer. The 1095-B will most likely be coming from their insurance company. All right, with that, I am going to go ahead and turn over to Richard, and he's going to walk through a little bit about 1099, etc., how it works, and you can go through it. So 1 second while we transition over.
Thank you, Jason. Okay, with 1099, etc., there are going to be two main ways to input the data. With 50 or more employees, you'll probably want to do the import, and to do that, you'll go to Utilities, Import Assistant, and then you can pick from one of these file types here. These are going to be the two main ones, the tab delimited and the comma delimited file, and we have templates that you can request from us to help you get those files set up for easy import. The other way is manually inputting the data. We have the ACA Filer module here, and you'll go in and select your payer. And then to input the data, you just click on Insured up here at the top and begin filling in the screens. As you can see, it looks pretty similar to the form. And then once you input one, you can click on Next down here and move on and input the next one. When you're ready to print, you'll click on Forms up here, go to 1095-C, and you'll have the different layouts of the form that you can select. And then it comes out and looks just like that. And then we have some reports for the covered individuals and the insured detail. and that'll give you the coverage codes, the safe harbor codes, and all that for all of the insured employees. Now, if you use 1099, etc. for your, you can also print from the menu screen here, forms and reports. If you use 1099, etc. for payroll, all of your ACA stuff will be entered into the payroll module, and you won't even have to worry about that ACA module. You'll just click up here at the top on ACA to do your printing. For the payer information, you can go into your payer edit screen, your ACA tab up here, and enter the required information. And then for the employees, you'll go into input for your list of employees. Go to the edit screen. You can enter the general information if it's not already entered right here on the general info, and then go to the ACA tab, and you can tell the program that it is an ACA eligible employee by checking the box right here, and then you enter all of the information. To print your ACA forms and ACA reports from payroll, again, you click on the ACA up here and select whichever report or form that you would like to print. Also, we will have electronic filing available. You click on the ACA and it'll be right under here as well. And that pretty much sums it up. I'd like to say that we do have free technical support, so if you have any questions when you're going through that, you definitely could give us a call and we'll be happy to help you with it. And I'm going to go ahead and give this back over to Jason.
Sorry, everybody. Just wanted to go through a couple quick questions here. Do retired employees that are still covered under a group health plan paid by the employer included in the count? No, their effective hours worked would be 0, so that wouldn't be applicable. Will group insurance file the 1095-C for employers with greater than 50 employees? Again, the answer to that is probably not. You would want to check with your group insurance and see if that is going to be applicable in that case? Chances are I would say no. Filing with 1095-C is the responsibility of the employer, not the insurance company. You may have worked out a deal with the insurance company to file them on your behalf, but ultimately it's your responsibility as the employer. Technical support number. Richard, do you guys have, I have a quick slide here regarding the websites for Nelco and 1099, etc. I know we can track down the tech support numbers there. Richard, do you want to jump in with the technical support number for 1099, etc.?
Sure, they can reach technical support at area code 405-340-0697.
Perfect. Richard, quick question. They had, do we need pre-printed forms?
Pre-printed forms are not necessary. They can purchase the software-generated forms feature and print them on plain paper, or they can buy the pre-printed forms from Nelco and print on those.
Mm-hmm. Yeah, and we also have blank perforated paper with envelopes that make it easy to print and mail those to your employees. Question, we have W-2 employees and subcontractors. We provide them with 1099 miscellaneous at the end of the year. Some of the subcontractors are enrolled in health insurance. Should we provide them with a 1095-B? The only scenario in which you would be supplying a 1095-B is if you are self-insured and less than 50 employees. So if you're self-insured, you would need to provide a 1095-B to anybody who is covered under your plan. In general, though, your subcontractors, if they're not considered employees, you wouldn't need to file a 1095-C for them. Hope that answers the question. Are there any other questions that we didn't get to? I can just going through questions here. Quick question about what self-insured means. That's a great question, and there's a number of ways to explain it, but the way I would define self-insured is who pays the bill and who accepts the risk. So in a normal environment, the employer would call up, Blue Cross Blue Shield, Aetna, whoever the applicable person might be, and say, I need to purchase insurance for my employees, and then they work out a deal where certain amounts deducted from the employee's paycheck, and then the employee goes to the doctor, and the doctor sends the bill to Blue Cross Blue Shield. In a self-insured situation, the employer sends the actual amount to, the doctor sends the actual bill to the employer or to an administrator that the employer has set up. But ultimately, if there's a $100 bill, the employer has to pay the $100 bill. In the fully insured scenario, if there's a $100 bill, the insurer pays a $100 bill, and all the employer is on the hook for is their premium that they have to pay the insurance company. So I hope that makes sense about the difference between self-insured and fully insured. Again, fully insured, the insurance company is ultimately on the hook for any payments. Self-insured, the employer is on the hook for the payments. Kind of oversimplified, but you guys get the idea about what it means. Couple quick questions. Can we get the this presentation via email, slides, PDFs? Absolutely. We can go ahead and provide those slides to you. Just go ahead and in the question box, just put slides. If you want to ask a question, it just says slides. I'll go ahead and email those slides over to you. Also questions about whether the video is going to be available. And yes, I will work with 1099, et cetera, and make sure that we get the video available to you. I'm trying to see if there's any other questions I'm missing. All right, I think that about covers everything. We will wrap it up here. If you guys have any questions, feel free to go to our website, give us a call, and we will go from there. Richard, anything to add before we go?
No, thank you.
All right, well, thank you, everybody, and have a great holiday.